Hello and welcome to another edition of 9 to 5 Live. And what a week it's been. Stock markets finished on a positive note on Friday after a pretty dismal week. This was put down to the fact that job creation numbers announced in the US were slightly worse than expected. Here to explain this to us and other things is Francois Savary. Hello, Francois.
Hello, Mark.
Thank you for joining us. Nice to see you again. So what a week it's been. Non-farm payrolls to 175,000. The market's going up. Are we back in a situation where negative or not so good numbers are positive for the stock market?
I would say yes. I would say that when you were living in an environment where during April, you had a growing number of people worrying that interest rate would be hiked because the economy was too strong, the non-farm payrolls numbers that we had on Friday were very good for investors. First of all, as you mentioned, but the fact that the number of job creation was significantly less than expected and on a downward path, meaning that the economic activity in the US is slowing down, not a lot, but it is slowing down, which is good for soft landing. And the second element, which was also very appreciated by the investors, was the fact that average early earnings were less than expected, growing 0.2%, while it was expected to be 0.3. And you need to put that in perspective with other numbers that were published last week, which were the fact that productivity was bad and unit labor costs were growing more than expected in the first quarter. So for people, those numbers on the average early earnings were very positive because they tell you that the risk of inflation through labor market is reduced. So that's the reason why you had such a reaction by the market, be it the bond market or the equity market on Friday.
You mentioned soft landing, and that's what everyone is hoping for. Is that why the market has started to price back in the space of 1 week, 2 interest rate cuts by the Fed this year?
Yes, it's very interesting. It's very interesting to see the behavior of investors in the course of the last few months. Really, what you saw in the market in the first quarter was this idea that there was only one possibility for the US equity, which was soft landing or no landing. Then you had some numbers coming from CPI, inflation, etc., that brought the idea that maybe it was stagflation that was going to be. And that's the reason why at one point people were saying maybe there will be a rate hike by the Fed by the end of the year. Suddenly, what is interesting, last week brought you a lot of statistics going in different ways. What it means that investors now need to consider the market with a full range of possibilities in terms of scenarios. That's very interesting because it means that you have forces in the market that are confronting. Some people saying soft landing, some people no landing, some people are saying stagflation. So it brought back some discussion in the market. And last week, to this regard, was very, very interesting because you have all kind of statistics and all kind of possibilities that you could read through the statistics.
All right, well, we'll come back to the macro environment in a minute. Let's just talk about Apple very quickly. Thursday night, after the close of the US stock market, they announced several things: a dividend and the biggest ever share buyback in history of $110 billion. What do you think that says about Apple?
It says to you that Apple, which announced a few weeks ago that its first quarter numbers were not particularly good, mainly because of China, it tells you that the company is maturing, that from a very strong growth company, the fact that they decide to give their first dividend ever tells you that the company is maturing and getting more of a value company compared to the fact that people were seeing Apple as a super growth company for many years. So that's very interesting in terms of market development.
Let's go back to the Fed and the macro story now. FOMC last week, Federal Reserve's Open Market Committee. Jay Powell was talking for quite a long time. He had quite a few interesting things to say. What's your take on those events?
I think that what is stellar with Mr. Powell, and I must say that I am surprised by, is the fact that he is very able in terms of communication. The ability of Mr. Powell and the Fed currently to manage the expectation of the market and the way they communicate their message I must say is quite surprising in a positive way. And the main message is very positive because at the end of the day, to the question of a possible rate hike, he said, no, there is no sign that there is a need for such a development in the US economy. So on the one side, he considered, and the member of the Fed considered that there is no need to a further rate hike in the US. And on the other side, he reaffirmed the message that he's giving to us, which is higher for longer. Don't expect the Fed to move quickly lowering interest rates. But with the numbers on the non-farm payrolls, it is quite possible that we will see a rate cut by the fall of this year.
Okay, so the Federal Reserve are maintaining a bit of powder. Um, is that's in the face of PMI numbers, leading indicators that are purchase manager index in both the service industry and in manufacturing that are below 50 and therefore in restrictive territory. What's your take on that?
The number is, I would say, the take that you can have needs to be cautious because on the one side, you are right. The numbers are coming down a little bit, which is good. They tell you that economic activity is slowing down. This is what you want to see in the US. On the other side, what was interesting in the numbers that were published is the fact that prices are going up. And this is not necessarily a very positive development. This is something that could lead to the idea that stagflation is really a risk in the US economy. But don't make too much of the price development lately because it's only one numbers. Do not define a trend with one numbers. You need more than one numbers to consider that the trend towards higher prices is something to be worried about.
Are you still moderately bullish in the stock market? How should investors be positioning themselves now?
As I told you a few weeks ago, that there would be some volatility in the short term. It's something that is quite logical. The market went up so much from October onwards, and I think that we were due for a consolidation phase. I'm not sure that we are out of this consolidation phase. In the coming weeks, we can still experience a return of volatility. Medium term, as long as earnings are delivering, and I think this is the key point, as long as earnings and for the time being they are delivering, I think that the market can move a little bit higher by the end of the year.
What is the next big event we're expecting and what's happening this week?
I would say that it's a slow week. This week is a slow week. We are coming to the end of the earnings season, which was quite good. I think that the main thing that you need to watch first, you have Xi Jinping coming to Europe, visiting Europe. It will be interesting to see how they can mend the relation between China and Europe, which has more and more the habit of following the US in the commercial war against China. So very interesting to see how Xi Jinping. I will watch that very clearly. In terms of economic numbers, you have not a lot of numbers that are significant. You have central bankers talking, central banker reunion, so that I will watch. And I think in terms of numbers, in company number, interesting two companies I would put forward. One is UBS to see what is happening in terms of the fusion with Credit Suisse. And Walt Disney, which is currently a company that makes a lot of headlines because of the will of some people to really act on the strategy of the company.
Okay, Francois, I think that's all we've got time for today. Thank you very much. Goodbye. See you next
Goodbye.
Monday.
See you next
And could I
Monday.
ask,
Bye-bye.
and could I ask viewers, please, if you like what we're doing, please support us and please help by liking and subscribing. Thank you very much in advance. Thank you. Bye-bye.
Bye-bye.